Good afternoon, ladies and gentlemen. Good morning to those of you who are tuning in from Austria. My name is Ingo Maloch-Schmidt. I'm the Austrian Trade Commissioner in Tokyo, and I want to give you a very warm welcome to our webinar today, which deals about the Sogo Shosha, an inside look into Japan's unique trading giants. And it is my great pleasure to present to you today a very distinguished speaker. He's probably the person to tell you about Sogo Shosha, and this is Patrick Ryan. Patrick is a US citizen, an economist who graduated from Sophia University in International Economics and Business. And Sophia University is located here in Tokyo, and he has been living here for many years. And Patrick Ryan, actually, he is now senior analyst at the Marubeni Research Institute, and he has been with Marubeni for over 30 years. Now, Marubeni Research Institute is one of a very distinguished research institute that does more than anything macroeconomic research, but also research in geopolitics, industry research, and of course research on Sogo Shoshas. And it goes without saying that Marubeni, of course, is itself one of these, well, now 7 large trading companies, these so-called Sogo Shoshas. Patrick Ryan will give us a presentation of about 40 minutes, I understand, about the Sogo Shoshas, and you do not need to jot down everything that he says. You can get a copy of your this PowerPoint presentation as PDF. Actually, you can download it even right now while you're watching. You will see on your in your software, you should see something that reads like handouts, depending on if you're on Windows or on any other of the systems. But it should say handout or material or something like this, and you will find 3 documents there. You will find the Shosha handbook, which we will explain a bit later, which is also a description about the Sogo Shoshas. You will see Sogo Shosha Patrick Ryan PDF. Now, these are the 22 slides, I understand, that he's going to present. And you will find a 3rd small document, PDF document, Sogo Shosha in Deutschland PDF. This is especially for our listeners and participants from Austria who would like to get in contact with the European and German-speaking subsidiaries of the Sogo Shoshas. Ladies and gentlemen, you can ask questions during the presentation, already during and after the presentation, of course. You should have on your in your software something that says something like questions, depending on the language and the system you're using. So you can type them. They're not spoken questions, but you can type your questions, and we will try to answer them at the end of the webinar. But first, before we begin, let us ask you some questions. And these should go on your screen now. And the first question we have for you, a quick poll, as we call them: what is your main type of business? And I would ask you to please answer this. Are you representing a producer or industry? Are you representing a trading company? Are you a consultant? Do you have any other business or business-related service that you represent? Or is your interest not a business interest, but maybe any other reason? Maybe you're a student of Japanese or whatever it is, but not in business. So let's see, maybe a few more answers we can still get. Not even half of you have voted yet, I can see. We just do this so that you can find, you see how to work with the software. So I see almost 2/3 are voting. Oh yes, votes still coming in. I think now we get most of our attendants have found where to vote. Okay, and let me up. What did I do now? Maybe I did something wrong now. I wanted to show you the responses now. Okay, I think I'm doing something wrong now because I could not get the answer. But 51% said they were producers or industry, 5% trading company, 16% said they were consultants, and 26% other business related services, and 2% other interests than business. Okay, so this is how the polls should have worked, because I didn't manage to show you the results, I think. So without further ado, I would hand over the microphone to Patrick Ryan and ask him to give us his presentation of this Sogo Shosha. Thank you. Ryan, please.
Thank you, Ingemar. Anyway, thank you for having me. You might be wondering why a non-Japanese is giving a lecture on or a presentation on the Japanese trading firms, or what we call Sogo Shosha in Japanese. Actually, my first job at Marubeni, when I was at the time in international human resources and career development, was to go around to all the business divisions and departments. We had no English, little English in those days, and I collected as much information as possible, and I wrote a pamphlet, a booklet, called Marubeni, a Trade Concern, which explained the Marubeni and the Japanese Sōgō Shōsha to our overseas employees. And ever since that time, one of my roles has been to explain the Sōgō Shōsha to business delegations, government delegations, clients, customers, our employees, interns, business schools and universities, and so on. So basically, that's why I'm here today. Anyway, this presentation is usually an hour and a half long, and I've condensed it to 45 minutes. So I'd like to get started because I have a lot of information to cover. So here we go. Let's go to the first slide. This is basically some of our business investments between 2013 and 18. We've made well more than 100 investments and agreements for major projects. Here I have 41 items, 26 countries, 14 different industries. Everything from, I won't read them all, but everything from power plants in Indonesia and Thailand to iron ore in Australia, copper in Chile, aviation parts and grain distribution in the United States, real estate development in China, cardboard and container manufacturing in India, feed and chicken processing in Myanmar, the supply of railway cars to Argentina, food product processing in Turkey, a solar power plant in the UAE, and even electricity retailing and cloud computing in Japan. Oh my goodness. Now, if you were a business professor and you saw this list, you might say one of two things. One, you might say, this is some sort of investment firm, hedge fund, private equity firm, some sort of investment firm. I want to make it crystal clear, we are not an investment firm. The other thing they might say is that this company is in deep trouble, much too diversified to survive. But what I'm going to do today is explain how being in all these different industries is actually part of our core business. And actually, our business is not that difficult to understand. We basically have two businesses. One is our traditional core business, that as a super trader, a super supplier, wholesaler, distributor in the supply chain, upstream from raw materials, midstream to the final product, and downstream to consumer in many different industries. And our other business is as an organizer of large-scale infrastructure projects. What's complex is how we carry this business out. Okay, I'm going back to the title page. Sogo Shosha. How is it translated usually in English? Usually it's translated as Japanese General Trading Company. Bad translation. These are the characters for Sogo Shosha in Japanese. So the first character looks very complex because that's the nuance. It means all-encompassing of many things. Go means united or combine. Sho, the third one, means commerce or business, and sha means company or organization. So the literal translation of Sogo Shosha is to combine and unite all these products, services, functions, and even companies into one large business organization. So how I like to translate it is as the Japanese diversified trading conglomerates, given kind of nuance of complexity. Okay, moving right along. This is slide 2. I only want to mention a few things here. One is the Japanese Sogo Shosha are unique to Japan. And I don't have time to explain how we became unique. However, the reason for this is basically our business development closely reflected that of Japan's own very unique economic development. First, in the latter half of the 19th century, when Japan embarked on a path of rapid industrialization and commercialization to catch up with the West, to build a strong military, and after World War II, when Japan's infrastructure and industry was destroyed and they had to rebuild rapidly. We played an important role in both those periods of economic development. The other thing I want to mention is that given our size and sophistication and diversity, we're just impossible to imitate. Many have tried, most all have failed. And the last thing I want to mention is we're not well known outside of Japan. Here I have 3 lists of the Global Fortune 500 of the largest companies in the world. I have to mention about 10 years ago, we moved from Japanese and US accounting standards to international financial reporting standards. And this cut our sales by more than half, but we're still in the top half of the Global Fortune 500. However, 20 years ago, the largest 5 companies in the Global Fortune 500 were the Sogo Shosha. And if you ask an international businessman if they had ever heard of any of these Sogo Shosha, they might have said, oh yeah, Mitsubishi Motors, the automobile company, or Sumitomo Metal, which was a steel manufacturer. No, Mitsubishi Motors and Sumitomo Metal were not Sogo Shosha. So why didn't anyone know who the largest 5 companies in the world were? That's because our name is not found on consumer products. It's not found on retail outlets, even though the Sogo Shosha own some of the most famous convenience store chains and supermarket chains in Japan, Kentucky Fried Chicken, Mitsubishi. We act as links behind the scenes, upstream, midstream, and downstream in the supply chain. Okay, who are we? Well, basically the big 5 are Marubeni, Itochu, Mitsui, Mitsubishi, and Sumitomo. Marubeni and Itochu, we were the same company before World War II. Here I just want to show you our size, so to speak. Basically a sale, I forgot to mention also, Sojitz is another Sogo Shosha. They're a merger between Nissho Iwai and Nichimen. And then Toyoda Tsusho was the trading arm of Toyota Motor Corporation. And they bought a smaller Sogo Shosha in order to diversify. But I'm talking about the big 5 today. So the sales for one big 5 Sogo Shosha are about $90 billion. The total value of goods we handle would be about 160 billion, large. Total assets, about 100 billion. And the number of group companies, about 500. Most of these would be more than 50% owned. The other thing I'd like to mention is that in terms of our organizational structure and the business we're involved in, we're almost identical. We're basically the same. The only difference is our areas of strength. So Mitsubishi and Mitsui are very famous for, are very strong in energy, metals, and mineral resources. Itochu in upstream, downstream textiles. Marubeni in electric power plants and the food supply chain. So basically, it's just the difference in terms of the areas of strength. Okay, I'm going fast. I mentioned our importance to Japan's economy. You see on the upper left-hand pie charts, this is Japan's economy in the 1980s. It was by far the second largest economy in the world at the time. We had 9 Sogo Shosha at the time. Japan's 9 Sogo Shosha at the time handled nearly 70% of all Japan's total imports and more than 50% of all total exports. And the reason for this, as you know, Japan has no raw materials, so the Sogo Shosha imported all the raw materials. supplied it to the manufacturers, who then produced value-added items, which we then exported for them. And this helped the Japanese manufacturers concentrate their resources on technology and production, which contributed greatly to Japan's economy. Now, in the mid-1980s, there was a structural shift or change. More than 90% of all Japan's foreign direct investment came after the mid-1980s. These are the manufacturers moving overseas. Toyota and Honda building automobile plants in the United States. So currently, there are 7 Sogo Shosha, and we handle about 1/3 of all Japan's total imports. Large, but much smaller than before, and about 20% of total exports. And of course, this is because the Japanese manufacturers are manufacturing and selling their products in local overseas markets. However, in terms of third country trade, this is trade that we handle that doesn't touch Japan. So for example, textiles between China and Germany. It used to be 9% of our business, now it's more than 40%. So what this means is our global role in the supply chain is growing. Okay? What makes us unique? Basically, I'm looking at 3 distinguishing features. Now, the first one is what I call scope and scale. Following World War II, the Sogo Shosha were basically just traders or middlemen between sellers and buyers. Our profit margins were very small, so there are only 2 ways to make a profit. One was volume. We had to increase sales. We had to get out there and really hustle, finding new markets, new customers, even helping our current customers expand their business. The other way to make a profit was to take this trading expertise that we had and apply them to as many different products as possible, hopefully higher value added products. So they say a typical Sogo Shosha handles between 30,000 and 50,000 different products, everything from noodles to satellites. And we do it in huge volumes, millions of tons of grain, hundreds of thousands of computers, and so on. Now, how do we organize this business? It's kind of simple. I mentioned that we're involved in the supply chain of many different industries, so we just divide our business by industry. This is Marubeni's business structure. This is our headquarters. And we just divide our business by industry. So each of these divisions I've listed here are just a different industry. So lifestyle division is textiles and general merchandise, forest products, paper and pulp, food, everything from grain to supermarkets, chemicals, easy to understand, energy, oil and gas, metals and minerals, our infrastructure division, power plants, manufacturing plants, railways, for example, aerospace, satellites, airplanes, ships, construction, industrial machinery, for example. Just we've divide our business by industry. And each of these divisions is like a mini company. They're responsible for their own strategies worldwide. And as part of that strategy, they may buy a company, they may do joint venture. We do lots of joint ventures. They may create a new company, or they may take an equity stake in a company for strategic purposes. Now we have about 440 of these, what we call business division subsidiaries or group companies. So each of these divisions may have 30 or more subsidiary companies under their management. Everything, so in the food division, as I mentioned, everything from grain trader, to feed processing, chicken processing that I mentioned in Myanmar, and ownership stakes in supermarkets. So that's basically how we manage our business. Okay, what's another distinguishing feature? I mentioned we're a conglomerate, the center of a conglomerate. Global scope. This is Marubeni Corporation Japan, headquarters, worldwide headquarters. We also have many Marubenis overseas, our corporate subsidiaries. For example, Marubeni America, Marubeni Europe, Marubeni China, Marubeni ASEAN. And each of these corporate subsidiaries has their own corporate offices. So maybe 15 or 16 in Europe, 10 or 11 in the United States, and so on. So a typical Sogo Shosha has about 110 to 130 corporate offices in maybe 70 or more countries. And also we have our group companies. So I said Marubeni has about 440. Around 60%, between 50 and 60% of these are also overseas. So a typical Sogo Shosha might have 400 or 500 units globally in probably 70, 80, or 90 countries. So we're very global. That's fairly unique. The last distinguishing feature is what I call economies of functions. Basically, over the years in carrying out our trading and wholesaling and distribution business, we developed other expertise, non-trading expertise that are very important to our business. So for example, information. This is our global information and business network. Now in the mid-1990s, when internet appeared, we lost a hardware advantage at that time. However, we still have a software advantage because we still have people in all these different units overseas liaisoning with governments and businesses and customers and clients and gathering information firsthand. And we use this information to find new products, new markets, coordinate business with our upstream and downstream companies, and this kind of thing. So that's very important to our business. Another one is logistics. This is natural for traders. This is moving goods from the seller to the buyer. We're involved in warehousing and shipping arrangements and insurance. And we have advanced IT supply chain management, which we provide for our customers. Important. Finance, we have a seller and we have a buyer. The buyer doesn't have enough money. What do? We loan them the money. We provide them credit. We provide loan guarantees. We do currency hedging. We do future contracts for our employees and our own businesses. Leasing. We also do project finance for large-scale projects. We also have investment. We invest in companies in the supply chain to protect ourselves as middlemen and also to improve our profit structure. And we have a kind of a sophisticated risk management system, credit risk management, investment risk management, logistics risk management, and even country risk management, where we put a credit limit on how much we can invest in a country. And by combining all these, information, logistics, project finance, and risk management, we can organize large-scale projects. I hope I'm not going too fast, but I'm covering a lot of information here. Okay, next I want to talk about how we developed our business or got into different businesses over time, which will give you a better idea of where we are now. I won't talk about our pre-World War II development when the trading companies emerged, because I don't have time. So I'll go to the modern Japanese Sōgō Shosha following World War II. So what did we do? From the late 40s to the early 60s, of course, Japan's infrastructure and industry was completely destroyed. Japanese government, under their industrial policy, said manufacturers concentrate on manufacturing. Banks, you loan money to the big manufacturers, and the trading companies concentrate on import and export. So we brought in all and supplied all the raw materials, intermediate materials, industrial machinery and equipment, and technology, that's important, for Japanese industry to rebuild after World War II. We also imported all the energy resources to fuel the economy. We also imported foodstuffs to feed the Japanese people. And then we exported whatever we could. First it was textiles, then heavy industry, goods like steel. And as Japan's economy recovered, small and medium-sized enterprises emerged, and we supplied them with goods and materials and also financing, because the Japanese banks didn't want to lend them money because they thought they were risky. So we became a super supplier to upstream and Japanese manufacturers during this period. Okay, next, 1960s, early 70s, 1964 Tokyo Olympics. Japan emerges as a consumer economy. How did this affect the Sogo Shosha? Well, first of all, the Japanese government was worried about having enough raw materials to fuel the Japanese economy. So they came to the Sogo Shosha and they encouraged us and backed us into going into investment in overseas natural resource development projects, some of our first investments. Also, consumer products, their supply chain, they have more advanced materials and they need more sophisticated materials. So our upstream supply chain grew. In terms of the Japanese manufacturers, also they were manufacturing consumer goods, electronic appliances, automobiles, and other high-valued items. And so we began to export and market them in overseas markets. For example, Marubeni, we brought Nissan to the United States. So we're moving downstream in overseas markets. That's a point. Real estate, we have an ITC and real estate division. How did we get into real estate? Well, we were already supplying construction companies in Japan with construction materials and construction equipment upstream. And with this huge demand, because in Japan at the time, during this time, from the late 50s to the early 70s, Japan was growing by more than 10% a year. So incomes were growing, populations growing. Everybody wanted an automobile. Everybody wanted a refrigerator, a television set, a home. So with this huge demand, the construction companies came to us. Will you share the risk in terms of financing? Yes. Will you help us with the planning and logistics of the development? Yes. And the marketing? Yes. So we start moving downstream in real estate. In terms of the food industry, we're already supplying food makers with food stuff. But as incomes grow, the diets change. So Japanese housewives, they want ready-to-eat foods and processed foods off the shelf. So we supply them now with modern equipment, additional ingredients, packaging, and then we would distribute those to the supermarket. So during this period, we moved downstream in the supply chain. Okay, I'm going quick. Mid-70s or early 70s to the mid-80s, what happened? Basically, two things happened. Large-scale project organizing and what we call the trader's dilemma. How did we get into large-scale project organizing? Well, we'd already in the 1950s imported industrial equipment and machinery and technologies to Japanese industry to rebuild their factories and infrastructure. And that we were exporting in the 60s and 70s Japanese industrial equipment and machinery and technology. So we kind of knew this business. But what really spurred this business was the first oil shock, 1973. This was caused by the Israeli-Arab War. The Israelis came out on top. The Arab countries were very angry. Many of them, of course, were large oil producers. OPEC had just been formed. So what they did as punishment, so to speak, was to embargo oil to Israel's allies, which were the United States and a few countries in Western Europe. Well, the price of oil skyrocketed. All this oil money came flowing into these oil-producing countries. And at the time, the oil development in these countries, especially the higher value-added refining and petrochemical production, was carried out by mostly foreign oil companies, and much of it in their own countries. So countries like Saudi Arabia, they want their own refineries, they want their own petrochemical plants, they want other infrastructure. And the only countries that had the engineering prowess, US, Western Europe, and Japan. So they came to the Japanese, the Sogo Shosha. We were already in all those countries as we exported resources, and they asked us, can you do this for us? And we went to our information and business network, and we went to, for example, Toyota Engineering. Can you handle the engineering and construction? Yes. Go to Hitachi. Can you supply us with this kind of machinery, this kind of equipment? Yes. And so on and so forth. Logistics, moving machinery and materials, it's natural for us. We could do that easily. We went to commercial banks we worked with and government banks. We were able to arrange financing. We found that our functions, our expertise in information and logistics and project finance and risk management fit this business perfectly. And this is really big business for us now. The other thing that happened during this period was the trader's dilemma. This is what we call the winter of the Sogo Shosha. The large-scale Japanese manufacturers now decided they didn't need a middleman. So they started to either reduce our role in the supply chain or eliminate us. And as traders, if we don't have goods to supply our customers, we're dead. We don't have a business. So what do? We started to aggressively invest in what we call sources of supply. Manufacturers, especially joint ventures with manufacturers or with distributors with strong relationship with producers to gain ownership in the supply chain and gain ownership of the goods to protect ourselves. So that's how we came to a solution for the trader's dilemma. Okay, mid-80s, mid-90s, Japanese economy has now become a leisure service economy. We're starting now to handle higher value items. Software and computers. We brought Apple to Japan. Medical equipment, aviation, airplanes, satellites. We entered the service industry, fast food, retail, health clubs, financial service like leasing for automobiles and office equipment, and so on. And then we supplied logistics support for Japanese manufacturers. After the mid-1980s, they're moving overseas and created joint ventures with many of them. Okay, I've got us up to the mid-1990s. Mid-1990s to the mid-2000s. This was what I call the second winter of the Sogo Shosha. And this was actually a sea change even for Japanese corporations. In terms of our business, IT. We went strong into IT business. Medical healthcare was deregulated in Japan. We went into that business. Environmental business, renewable energy, recycling, carbon trading, reforestation, because they were big issues at the time. However, what really happened during this time to us was radical domestic and global changes. What happened in Japan was they had a high growth economy for 40 years, overheated. The Bank of Japan raised interest rates, and it began to deflate. The bubble began to burst. Deflationary pressures, cost pressures, price destruction, extreme competition domestically. This led to financial deterioration in companies. Many companies started going bankrupt, which led to bad debts, and which led banks were starting to become unable to loan money, what we call a credit crunch. And we had economic reforms, deregulation of domestic industry, because the Japanese government were worried about manufacturers going overseas, and the domestic industry was not competitive and high cost. These are affecting our businesses. And you have the global changes. IT emerges, mid-1990s. There goes the Sogo Shosha's information advantage. The Asian crisis, Southeast Asia, currency crisis. Japanese companies in the Sogo Shosha were the most heavily invested in Southeast Asia. This hurt us. The impact of Korean, Taiwanese, and Chinese manufacturers competing now with Japanese manufacturers, which we supplied. Free trade agreements, opening economies, further globalization, mega competition. This all just hit us. Not just the Japanese trading companies, Sogo Shosha, but many Japanese corporations in general. And probably the biggest thing that happened here was the idea of the credit crunch. Almost all Japanese companies get their money mostly from banks. And the banks, it was hard to get credit from them. And to get credit from both foreign banks and Japanese banks now, and they changed the loan criteria. Now, debt to equity ratio and cash flow, meaning profits, is very important. We had to do what we call balance sheet restructuring. They did it all through Japan between the late 90s and the mid 2000s. And so we had to basically sell off our assets, bad assets, including stocks. Now, the Japanese stock market at this time was 70% owned by other Japanese companies. And they did not trade your stock without your permission. These are called friendly shareholdings. So what that meant is basically shareholders didn't really matter, and profits were not that important at the time. Well, now that they had to sell off assets, including stocks, many companies became more than 50% owned by foreigners or foreigners and individuals, which made shareholders much stronger in terms of their business. And also profits became much more important. And this basically changed the way Japanese corporations thought. It was a sea change in Japan. It was probably the end of post-war industrial Japanese corporate structures. So what happened to us during this time is basically this forced us to do what we call selection and concentration. We had to go select our strongest businesses and decide to put more resources into them while slimming down our weaker businesses. We had to make a profit. We didn't do that before. Then we looked at different fields and markets and prioritized them strategically, looking for growing business fields and growing markets geographically. This is also something we did. The other thing we did, because of stronger shareholder pressure, was revamp our management systems. And this was all of many Japanese corporations. This is what I call the modernizing of Japanese management systems. HR became more performance-based. Compliance, corporate governance became stronger. Investor relations and corporate social responsibility became important. So this was also a sea change. And in terms of the Sogo Shosha, what really helped us was in modernizing and creating a more sophisticated risk management system, including country risk, investment risk, credit risk, logistic risk, etc. But the biggest thing within this was investment risk. In other words, how we came to manage our investments. And I don't have time to really talk about this. Basically, we went to a portfolio management concept and we applied a formula. It's economic value added. In this case, in our case, it was profit after tax minus your risk asset costs and times your cost of capital. But anyway, we applied this formula to all our subsidiary companies. And we monitored them religiously. And after 3 years, if they were a minus, they had to exit, which we had never done before. Now it's 5 years. And of course, in our large scale projects, you can't apply this kind of formula, but we use a payback period kind of formula. Anyway, by changing the way we manage our investments and our investor risk management system, we really were able to turn around our company. And the Sogo Shoshas have been doing very well ever since. So that's what happened during this time. So let me go to basically, this is kind of our final part. I want to simplify things for you because I've given you so much information. I want to talk about how we think. I want to talk our business model and kind of where we're going to make it easier to understand what we do. When you think of the Sogo Shosha, just think of the supply chain or value chain. That means the same thing. Every product has a supply chain, and there are hundreds of thousands of products, or even millions. And of course, the Sogo Shosha, we're not involved in every product supply chain. But in the product supply chains that we're involved in, our dream or goal, if you will, is to be able to integrate that supply chain upstream from raw materials, midstream to the final product, and downstream to the consumers, or at least be involved in each stage of that supply chain. So let me give you some examples. The first one is a traditional supply chain. I have here, you can see, iron ore, coal, steel, automobiles, or even household appliances, etc. Traditionally, what would we do? Well, we would buy iron ore and coal, in this case Australia, from a mining firm. Then we would arrange for shipping to Japan, and we would sell it to the steel firm. And we would get the difference in price, basically. Then we would buy the steel or take it on consignment and move it to the auto firm or the household appliance firm. And we would either get the difference in price or a fee for handling the transaction and shipping. Automobiles, we brought Nissan to United States, and we became their wholesaler worldwide. So we would export their autos, and then we would market them and wholesale them in the United States. And we would get a fee for the export and handling the transaction. So you can see our profit margins are quite small. Now, the steel firm can talk directly to the mining firm. So what do? We invested in the mining firm. We got ownership rights to metals and minerals, in this case, iron ore and coal. So this is Australia, Marubeni Iron Ore Australia, our subsidiary, for example. And so we get the iron ore now, we own it at cost. We ship it to Japan, sell it to a steel company, and prove our profit margin. Now, the auto firm and the household appliance firm can talk directly to the steel firm. So what do? Our subsidiary company, Marubeni Itochu Steel, has invested in steel processors or coil centers. The steel for auto firms and the steel for household appliance firms is different. The steel that they use, the specifications and the raw steel products are different. So what this steel processor does, we buy the steel from the steel manufacturer, and then we cut the steel and create the raw steel products customized for the auto industry or for the household appliance industry. So by investing in the steel processors, we have protected ourselves in the supply chain, and we also increase our profits because we have a higher value-added operation. Automobiles. We are Marubeni Nissan, wholesaler. Well, the former chairman, the infamous Carlos Ghosn, he didn't like middlemen, so he basically eliminated us as a wholesaler. What did? We started buying dealerships. United States, UK, Australia, China, because we knew the business as a wholesaler and we were involved in auto leasing. So you can see here, by using investment and gaining ownership, we're able to protect ourselves in the different stages of the supply chain. This is not necessarily integrated, and increase our profits. Let's look at a more integrated supply chain. This is our food product supply chain. This would be, for example, grain, animal feed, processed chicken. It could be beef, pork, could be coffee. In this case, basically, we would buy grain from grain traders. Then we would arrange for shipping, say, to Japan, to a grain terminal, where all the grain is separated. For example, soybeans, corn, and wheat, separated. Then we would take the soybean and, for example, soybeans and corn, and then we would move them, distribute them, and sell them to a feed processor. And we'd gain the difference in the price of grain in this transaction. Then we would arrange to transport it or distribute it to a chicken processor. We would either buy the feed and sell it to the chicken processor, or we would just handle the transaction and the shipping, and we'd get a profit from that transaction. Then we might buy the chicken product and then wholesale it to the supermarket. So you can see again our profit margins are small, and that the feed processor and the chicken processor can talk to the grain trader directly. What have we done? We've invested in huge grain trading operations and grain operations. For example, in the United States, we're one of the largest grain traders in the world. These are Gavilon and Columbia Grain. One's in the Midwest, one's in the Northwest. So we buy the grain directly from the farmers, and then in the Northwest, we ship it by rail to a port where we have loading and storage facilities. Then we arrange for shipping to Japan. It goes to a grain terminal. We own 4 or 5 grain terminals. We handle other importers' grain, make a little extra money. Then we will distribute that and sell the grain to a feed processor. This is Marubeni Nishin Feed. It's our own feed company, which we own and have a large share of the market in Japan. Then we will move the grain and sell it to a chicken processor. We have 2 chicken processors in Japan, Nippon Chucky, Well Farm Foods. We have it in other countries as well. Then we will take that product and wholesale it to the supermarkets. We have ownership in these 3 supermarket chains. So you can see how we've integrated the supply chain and protected ourselves, because we own it's integration because we own the grain traders, we own the grain terminal, the feed processor, the chicken processor, and have ownership in the supermarket, and that we gain all the value-added profits in the supply chain. So this is the idea. This is the thinking of the Sōgō Shosha, this upstream, downstream integration concept. You can see this in energy supply chain. This is natural gas, liquid natural gas, and electric power. We've invested in Qatar in gas field development. We sell this gas to Japanese power firms, but to ship it, you have to liquefy it. So you need a pipeline to move it to the liquefying plant at port. Our subsidiary, Marubeni Itochu Steel, can supply the pipeline. We can arrange for the liquefying plant, our infrastructure people, to be built, take an ownership stake. Then we ship it ship the LNG by vessel, which we own, LNG vessels, and we sell it to the electric power firm. And also the electricity market, retail market, was deregulated in Japan. So we have a company, Marubeni Power Retailing, that sells electricity to households and end users through some of our renewable energy power plants in Japan, hydro, wind, and solar. So you can see again the concept in energy. Crude oil. We've invested in oil development in many regions of the world. We have it shipped to Japan, for example, where we have our own food wholesalers. Fuel. They might sell jet fuel to airlines or gas to gas stations. We sell to Costco. But these companies, for example, Marubeni Energy Corporation has about 600 gas stations in Japan under their own brands. Again, upstream, downstream. This also applies to our infrastructure business. I call them mini supply chains. So for example, electric power business. We arrange for electric power plant to be built. We take ownership. It's an independent power producer. Now we can supply the fuel from upstream to run the power plant. And then we will sell the electricity to either wholesale it or retail it downstream. And then you can see this in our other infrastructure projects as well. And you can see the textile supply chain example, upstream to downstream. We have paper and pulp supply chain example. We don't really do a lot of retail in this area. And you can see this in all of our different divisions, basically. And then I also have one example of an IT supply chain that we have. And this is kind of an example of how we evolve into a new industry. Let me explain this IT supply chain right away. We have rights to undersea optic fiber cable. We own underground optic fiber cable in Japan. And from that, we have a company called Arteria Networks, which has its own broadband infrastructure network and services. People can connect to the broadband infrastructure. They do data storage, they have server storage, cloud computing, and various other types of things they do upstream. We have Marubeni Information Systems. They do smart manufacturing platforms, computer-aided manufacturing using AI and IoT, and they supply both the hardware and the software for this to companies in different industries. And they also handle digital IT customized information network services. They handle both the hardware and software in those services, and those network services. They do Marubeni's information systems and our Marubeni Group information systems and other things. We have Marubeni Network Solutions. They integrate telecommunication systems and they do wireless networks they handle. Marubeni IT Solutions providing software for businesses, all kinds of software for their networks, etc. We have MX Mobiling, which is a retail chain for mobile devices, smartphones, and they also do broadband services. And many other companies in this IT supply chain that I can't mention. This is an example of basically how we evolve. For the Sōgō Shosha to survive, basically, what we have to do is we have to know these industries better than the major players in them. We have to understand the trends, the directions of the industry. We have to understand the technology and how they might be used in these industries in order to survive. So in this kind of example, you can see how from the 1960s being involved in overseas telecommunication projects, investing in Japan in a private telecommunications firm, handling office equipment sales, including mini computers, office automation. We handled exports for advanced electronic equipment, semiconductors. And from this perch, we saw the personal computer boom. We became the second largest personal computer wholesaler and retailer in Japan. And from that, we were able to see the IT industry emerging. We were seeing these technologies emerging, and we moved quickly into this area, broadband infrastructure. And this is just an example of how the Sōgō Shosha survive, basically. So I'm getting to the end of this. So basically what we're doing is we're taking, not only are we supplying the physical products and materials to our customers, we're also trying to supply them with a package of services. So for example, our logistics, supply chain management, finance, credit, and other types of financing. IT, for example, in IT, applying it to manufacturing customers, etc. Risk management. We're applying all these to help our customers make their businesses more efficient. At the same time, we're looking for all new technologies to apply to these different non-trading functions, etc., to stay ahead of the game, so to speak. And sometimes these functions like logistics or finance become businesses in themselves, like finance, that we have a leasing business, for example. At the same time, our divisions are using our global business network, our information network, to look for new markets and new products, and to connect our upstream and downstream businesses possibly and coordinate with them. And at the same time, using our investment to integrate or gain ownership in the supply chain and increase our profit structure. So staying ahead of technology is very important. And in this day and age, as you know, the new industries, new businesses are being created more rapidly because of digital technology. So that's why we have what we call the new business generation department, which also has a digital innovation department. We're looking at AI and big data and IoT and advanced robotics and blockchain and 5G. We're involved in the EV business, smart grid, and all these other technologies, how they can be applied to our existing businesses, our existing functions, or how they can be used in an industry to create new business, or how they can be used cross-industry. We're looking at all these things right now. So we have, these are the last couple of years, some what we call next generation businesses we've entered, some of our new technology investments, collaborations, experiments, and trials. I don't have time to talk about these, but you can look at these to see where we're going with this. So finally, this is our business model, basically. I mentioned we have basically two businesses, our traditional trade in the supply chain and large-scale projects. You might hear the president or even chairman of a trading company, you might hear them say, we are moving away from our traditional trading business into investment. It's completely misleading. It's actually not really true. What they're really trying to say is, we're moving away from our traditional trade, which is without ownership. as just a middleman with our small profit margins into trade and wholesaling and distribution with ownership, where we've invested and gained ownership in the supply chain. That's basically what they're saying. And we see the same thing in our large-scale projects, where usually in the past we would just organize a consortium and arrange for the construction of some sort of large-scale infrastructure without ownership. More and more, we're moving into infrastructure and trying to get ownership in that infrastructure project. So this is basically where we're going. And it was really interesting. You may have heard that Warren Buffett, Berkshire Hathaway in the United States recently bought 5% share in all the top 5 Sogo Shosha. And an article in the Wall Street Journal said, oh, that's because the Sogo Shosha are becoming more like the Sogo Shosha are moving out of their trading business and becoming like private equity firms. That's complete nonsense. That's complete nonsense. It's not. We invest in the supply chain in our core business, basically. So that is what I really wanted to emphasize today. So basically, this is the end of my presentation. I covered a lot of information. I'm sure you have a lot of questions. I'll let Ingomar determine this. I'm also going to talk a little bit how you might want to approach a Sogo Shosha in terms of doing business. But right now, that's the end of my presentation, and you are all now experts on the Sogo Shosha.
Thank you very much, Patrick. What an excellent presentation, and well, you said it was concise, but actually so much information here. That was really interesting. Also, I learned a lot of new things here. Let me remind all ladies and gentlemen attending that you can ask questions. Actually, we've got quite a few questions here already, and we'll try to get to them one by one. Here is one which goes directly to your company, to Marubeni. Somebody asked, let me start with this one. How many people are directly employed at Marubeni headquarters? Would you know that, Patrick?
Yes. Our corporate headquarters employees are about it's about 5,600, between 5 and 6,000, with about 20% of those overseas. Those are our corporate headquarters employees. So at our headquarters in Tokyo, there's probably between 3,000 and 4,000, basically.
Okay.
Yeah.
And the other Sogo Shoshas will be
similar.
Similar in size, yeah.
We're basically about 6,000 in corporate headquarters. Now we have our group companies. So in Marubeni, in our group companies, we have, if you take all our group companies, we have about 42 to 43,000 employees. And if you add the group companies, and a typical Sogo Shosha has about 60,000 group employees, some more than others. So headquarters employees about 6,000, and Marubeni about 5 to 6,000 in Marubeni, and then 40 to 45,000 group employees.
Okay, thank you very much. I've got a question here. How does the structure of the Sogo Shoshas compare to that of the Korean conglomerates, such as Samsung?
I usually mention that. The Korean conglomerates, Korean Chaebol, like Samsung and Hyundai, they all have trading companies, but they're specialized. They're much smaller, and they're specialized only in a few areas. So I think Samsung has one that's basically specialized in construction and machinery, basically. Those are the only 2 areas they cover. So they're much smaller and specialized.
Okay, thank you. Another question. How do the 7 Sogo Shoshas compare with each other in the energy sector of oil, gas, and renewables? Is, for example, any particular one dominant in energy?
Yes. Mitsui and Mitsubishi Corporation are fairly dominant in energy and in metals and minerals, more so than the other Sogo Shosha, although we're all involved in that area. Marubeni and energy and metals, we're probably number 3 to 4 in that area. However, this is kind of an interesting concept. Mitsui and Mitsubishi, for example, in 2015, both Mitsui and Mitsubishi took one-time losses because the commodities prices dropped. They took one-time losses on their metals and minerals, on energy, oil and gas. It was their first loss since World War II, after World War II, the first time they ever had losses. They're okay now. One of the issues of the trading company has been, and all the trading companies, so for example, Mitsui in 2016, 90% of their net profits came from energy, metals, and minerals. And many of the Sogo Shosha, we had 50 or 60% in like 2012, 13, 50%, 60% of their profits came from metals, minerals, and energy. So the issue was how to wean yourself off the dependence on metals, minerals, and also you should have a few other commodities. It would be grain also. Wean yourself off these and have a better balance with our other divisions, with our other industries, supply chains. So that's what's been going on actually. So the Sogo Shosha, even Mitsui and Mitsubishi have been trying to put more resources and investment in their other non-energy, we call it non-resources divisions, basically. So that's them. And Itochu has been very successful at this. They probably have the least, and they had some of the biggest profits recently. So they've had some of the least dependence on energy, metals, and minerals.
Okay, thank you. Another question here for power generation technology. Austria is really strong in this, in renewable power generation, as you know, and technology for it. So how do I supply power generation technology in third countries? Talking about Southeast Asia here, and maybe let me put the question even in a more general context. How do I, as Austrian exporters, manufacturer of some good, how do I get in contact with these trading giants? What can I do?
So we'll divide this into two. Okay, so the first one is getting into business with the Sogo Shosha, let's say in Southeast Asia, in developing countries, because that's actually, if you look at our midterm management plan, of course, Asia, Southeast Asia too, is a huge focus, and essential industries, which of course is electricity, water utilities and such. And this is a big business that direction we're heading in now. This technology, we work with, for example, of course, we're out there, the Sogo Shosha, we're out there looking for technologies. We're out there looking for ways to make our power generation business. We usually do this, of course, with partners. In our power generation, we always do this with partners because there's big investments. So we won't own something 100%, but basically we'll do it with partners. So Siemens, Alstom, GE, Hitachi, we work with these companies. We do a lot with Alstom. And so now in terms of technologies also, for example, I'll give you one example of what we're doing in terms of new technologies, AI, software. So what we're trying to do now with existing power plants that we have in Asia or China, and even in advanced countries, we are taking, for example, GE has software, AI software, which you can apply. You know this better than I do, whoever asked the question. We apply to our power generation business. So it's an AI software. I don't know exactly how it works, but what it does is it acts as like a maintenance projection. It can determine when certain types of machinery, etc., need repair. It might, or you need to replace them, and it does it on a real-time basis. So this saves you a lot of money in terms of efficiency, for a cost and efficiency in power plants. And so anyway, we're always looking for technology like that, even our power generation business, absolutely. And this is going to be big business for us in Southeast Asia as well. Now we already have, the trading companies, a lot of our business, our existing businesses, we do business with other large-scale companies, so to speak. Now in our new next generation business, we're doing more with smaller companies. We're looking for technologies and new types of business kind of thing. So we do this a lot. Now, in our case, we might already have like a very strong relationship, as I mentioned, with Alstom or with Hitachi, where we do this. We already have these relationships, and with some Japanese companies and foreign companies in a lot of our business. Even in some electric power business, we've started to bring Chinese companies in to the power business as well. So that's a good question. So it's possible. let me move to the second part. And this will take me just a few minutes, how to approach the Japanese company. And I've been looking at different things. First of all, we have 30 to 50,000 different products. There's no one in our company, me included, I don't know all the type of products we handle. And I don't know who's handling every type of product. And I don't know exactly what services and products and materials and technology the Austrian companies provide. So I can't give you any detailed advice in this, but I can talk about approaching the Japanese company. First of all, if you're in Japan, it would be good to have somebody that speaks Japanese. If you're in Japan and you're connecting with our headquarters, we have a lot of English speakers, etc., but we also have a lot of people that don't speak English. And so if you contact a person that doesn't speak very good English, you may go nowhere, so to speak. So that's just one thing. The other thing is, if you look at our website, there's a lot of information to get to our website that's still on there. The first thing you need to look at is if you go into, like, for example, our company, we have our midterm management strategy, which is very important. In that strategy, you'll see like 3 or 4 pages is our growth strategy. One, it's basically into 3. One is our growth strategy for existing businesses. 1, to adapt technology to existing businesses to make them more efficient. 2 is growth strategy for these existing businesses to expand their business, new customers, etc. And the third one is what we call white space. There's nothing there. In other words, we're looking to do new things. And we've actually detailed, we looked at social issues and all kinds of other issues and growing markets. We actually have detailed what kind of technologies and businesses we're going to go to. And we've also detailed a little bit our current businesses, existing businesses, where they're going. Okay, go look at the midterm management plan and go through that. It'll help you focus know where your product might fit in. Then if you go to our website and go to our business area, all of our divisions are there, and you click on our divisions, and they will go into more detail in what products they're handling, what companies they're involved with, and those kind of things. And you can see it in a little more detail. So now you can kind of get a fix of where your products and services are. Okay, now, in terms of contact, well, if you go into our website too, you go to our company, first of all, you have our overseas offices, right? Japan and overseas offices. So if you're overseas, probably the first thing you should do is try to contact the corporate office near you. And this is, Ingemar has put down some of our corporate offices near you, etc. There's a few more, but you can get all those offices. So if the corporate office near you is not that receptive or they can't really answer, then you contact, for example, Marubeni Europe, which is our headquarters in Europe. And they handle all of our different kinds of businesses. These what I call mini Marubeni's corporate subsidiaries, they have mostly the same business divisions as Marubeni Japan, for example, in Europe, so to speak. So you can contact them. Now, if you want to go further, go into our organizational chart, and every single, in the Sogo Shosha, their websites are pretty similar. Go into every organizational chart, and you'll see one department in our corporate staff group. You'll see one department, usually called something like the Regional Administrative, the Regional Coordination Administrative Department. What they do in the headquarters, they're responsible for liaisoning and coordinating with our overseas offices, and also they're responsible for liaisoning with the markets there, and coordinating this with our businesses in Tokyo. So if you can, and they're divided up into regions. They're divided up like a Europe and CIS, and China, Southeast Asia, and the Americas. And they're responsible for our markets overseas, so they get inquiries. They know which business in Tokyo to send an inquiry to. And stuff. And each of the Sogo Shoshas has one of these. And they go by different names. I think Mitsui's is like Regional Promotion Department. Now, how to contact them sometimes is, and Ingemar can know this. This department in our company has very close relations with many embassies in Tokyo, actually. Many embassies in Tokyo. And so, and Ingemar can get this information for you for sure later. So if you contact embassies, your embassy, etc., you can probably get this information for this department, how to contact them. You might be able to get it through JETRO, the Japan External Trade Organization, so to speak. And also, you might be able to get this information from the Japan Trade Council. They make the Shosha handbook, I think. You might be able to get it through there. Contacting them would be good. And then the other thing, finally, I think here, if you go into our website too, we have what we call our group companies. Remember our 440? These 440 group companies are business division subsidiaries. This is like Mitsubishi owns Lawson Japan, right? That's their subsidiary. We own, for example, Maruetsu. We're an owner of Maruetsu supermarket in Japan. People in Japan will know these. Mitsubishi also owns Kentucky Fried Chicken Japan. Anyway, these are our subsidiary companies. They do our business. They directly do our business. So sometimes when you contact the headquarters, they handle the management of these businesses and maybe very large scale trade, commodity trade, where we don't have ownership. But they don't necessarily they manage these companies, but they don't necessarily, they can probably get in direct contact, but it's like a little bit indirect. So if you look into we list all our major group companies and their websites, and they're done by industry. Mm-hmm. Now, all 440 aren't listed. We used to, but probably a couple hundred or 300. And these are our businesses. And these are the people basically, not in all cases, not necessarily in infrastructure cases, but basically would be maybe receptive to your kind of product. Now, it's the same thing. If you contact one of these group companies, these business divisions, our subsidiary company in Japan, they might not have a good English speaker. You need to get somebody to speak Japanese to them, at least until they can connect you with an English speaker in the company. So anyway, those are some tips, and I can actually write this out later, and I'll give it to Ingomar for you.
Okay, thank you very much. Well, my short answer to this question, of course, is always get in contact with us, with the Austrian Trade Commission here, Advantage Austria, here in Tokyo. For those of you in Austria, wenden Sie sich an uns an das Außenwirtschaftscenter hier bei uns in Tokio oder auch in den anderen Ländern Südostasien, wo die Subsidiaries sind. For those of you who want to contact directly Sōgō Shosha, we do not have, unfortunately, any of the 7 Sōgō Shoshas represented in Austria right now. They do have investments in Austria with subsidiaries, but not in the trading business. And as mentioned before, we've put together a list of the 7 Sōgō Shoshas and their company addresses in Germany. And actually not only in Germany, they are, of course, represented in many different countries, but all of these 7 addresses in Germany are actually in Düsseldorf. Düsseldorf is well known as the little Japan of Europe. So all of them are based in Germany. Of course, not all of them doing, and in Düsseldorf, not all of them doing all sorts of business there, but they will also be able to get you in contact with maybe another subsidiaries that might be in charge of your specific kind of business. The Shosha handbook, which has been mentioned, also is this here, Shosha handbook. It's edited by the Japan Foreign Trade Council, and you can download these 2 documents together with these 22 slides that Patrick Ryan has used now, even now still in the handout section, but you will also get all attendees will get a download link in the next 2 days or so. Not only with this, but also with a copy of the video of this webinar, so that you can also listen to it once again or share it with maybe some colleagues. Now, we would have a number of other questions still, but Patrick, you wanted to add something here.
Just real quick, you said also all the information of our offices in Europe and worldwide, we have all the telephone numbers and faxes in the website as well. And the major companies usually have a website also. You just click on, you can get it by region or by division. That's all I wanted to say.
Okay, thank you very much. Let me take one last question and also ask you for a very short answer, please, Patrick. We got here a question to you. Is it always better to do business with Japanese companies through a trading company like a Sogo Shosha or even other trading companies? Does it make sense to try to do business with a Japanese manufacturer directly, or do you recommend to always go through a trading company?
It's a complicated question. It's a complex question. Yes and no. Actually, for many years in the 1980s or 1990s, because we are involved in every industry in Japan, for example, we know the industry and relationships very well. So many companies were told, try to go through this Sogo Shosha if you want to enter Japan, because we know the relationships and the industry very well. So we could say, well, no, we really can't help you because you're our competitor. Or we can say, oh, this type of industry is very conservative and it's already being represented by these Japanese companies. So often they recommend using the Sogo Shosha to enter Japan. But this day and age, as Japan has been deregulated more and more, there are a number of industries I think you can go directly to a manufacturer. It depends on the industry. I mean, there's some conservative industries, maybe the automobile industry, well, not so much, steel industry, for example. So it really depends on the industry. So in some cases, going through Sogo Shosha would be very viable. However, you might find that you're our competitor, so to speak. On the other hand, you can try also, in this day and age, you can try to go directly also, much more than you could, let's say 20 years ago, much more. And that depends on the industry also. There's some conservative industries I just mentioned. There are some industries that are open. But the Sogo Shosha,
and excuse me, one additional question here, really in one sentence, if possible. Do you go through one Sogo Shosha, or can you work with 2 or 3? Can you approach different ones, or will this be counterproductive?
Yes, you can approach different ones. It depends on how receptive they are to you. There's no problem. And in fact, the Sogo Shosha in large-scale projects and other things, we often work together. We go into joint ventures, and we sometimes go into joint ventures with non-large-scale infrastructure projects.
Okay, great. Well, thank you very much, Patrick, for this really interesting webinar here. And thank you, ladies and gentlemen, here in Japan and a few of you also in Austria, for your questions. We have a number of other questions which we still will answer individually. So in the next few days, we will send you out this material, the link to this material once again. If you did not download it right now, together with the link to a copy of the filming of this webinar, and also answer some of these other questions individually. Thank you very much for your attendance. We are here at Advantage Austria Tokyo to help you Austrian companies do business. Never mind the industry sector, never mind the size of your company, you know that we are here for you, and we have our experts like Patrick Ryan here today to help us to do that. And so yeah, keep safe and all the best. Good afternoon from Tokyo, and good morning once again to Austria. Thank you and bye-bye.
Thank you.